Hey guys, what's up? This is Francisco with Valorizo Capital. And in today's video, we're going to do the market update video. We're going to take a look at some of the major indexes, and then we're going to take a look also at bonds. We're going to take a look at gold, the dollar, and then we're going to take a look at the UBXY. That way we can have a clear understanding of what the market is trying to tell us and where the next move is actually going to and what the next move is actually going to be. Also, make sure to know that we have the Fed meeting of September is in the upcoming week. I think it's on Wednesday when we're going to have the Fed meeting, and that also is going to be a really important catalyst for any moves in the market. So also take that into consideration, and that way we can move into this analysis. Remember that my analysis is based on my personal information and is not financial advice. So now let's take a look here. The chart that I have in my screen is the chart of the UBXY, right? The chart of the UBXY. And I think that right now this chart is one of the most important charts in the market. As you can see right here, we can see a lot of supply somewhere around this 1036 level, which I also mentioned in my Twitter account, in which I mentioned that I consider this to be a really important level for the UBXY. We can also see that we have a squeeze. We have an active squeeze that is actually pointing to the downside. You can see that the momentum bars are actually starting to go a little bit orange, which means that the momentum is moving to the downside. We can see kind of a divergence between momentum that is going to the downside, and we can see that price is trying to move to the upside. Now, this purple line right here is the 1618 retracement measured from this swing high to this swing low right here, and we actually found some resistance at that level. You can see that we weren't able to close above this swing of 10.92, and we actually closed below that level, and we have the momentum of the squeeze pointing lower. Now, what I would like to see is the momentum in the trend oscillator starting to move to the downside below this 50 line right here. If the momentum in the trend oscillator is able to maintain this 50 line, there is a chance that the UBXY might only test this level and then move higher. Now, what are the chances of people? A lot of participants in the market are saying that we might see a crash in the market. Although that's certainly a possibility because everything is possible in the market, right? As long as we continue to be below this line right here, which is the last level of support before this major move into the downside of the UBXY, if we continue to trade below this level right here, the chances of a crash are actually pretty low. So what I'm seeing mostly is that all these kind of range in the UBXY, for now, as long as we continue to trade below this level, for now that's only we could consider that as only as a stopping point before continuing in the direction of the trend, and the trend in the UBXY has been lower. So just keep this level in your chart, right? Mark it as 11.36, and if the UBXY continues to trade below that level, you can see that we tested it here and we fell. As long as the UBXY continues to trade below that level, then I will consider that the path might continue to the downside, and then we can see a move higher in equities. Also, keep this level in mind, which is 1036. If we happen to close below 1036 and we happen to also close below the 8 exponential moving average, which is this orange EMA that I have on my charts, if we happen to move below that level and below 1036, and we start to see this squeeze starting to fire to the downside, I think that we're going to see a really strong rally in equities. I know that's kind of a contrarian analysis based on what everyone is saying, that the market is going to crash. But keep this chart in mind, because the UBXY tends to move before the market moves. And I'm not seeing any panic in the UBXY, even though the market has continued to move to the downside. The UBXY has basically just trading on a range, right? So keep this chart in mind. Keep those levels that I mentioned, right? Remember, the levels that I'm giving you is 1136, and the other level is 1036. So keep those levels in your chart, and then that way you can have a clear understanding of what might happen going into next week. So I think that's a really, really important chart to watch. And then the next chart that I want to show you is the chart of HYG. And this is the chart basically for junk bonds, right? For these high yield corporate bonds, which have more risk into them. So these tend to move higher with the market, these tend to move lower with the market, because these can serve as an indication of what is actually the risk sentiment of participants in the market. What I think is really interesting right now that is happening, you can see that the price has actually moved to the downside, but the momentum in the trend oscillator is starting to show some divergences. We can also see that the momentum in the squeeze is also moving to the upside. So that's usually what happens, and what I always mention in this channel is that momentum tends to change way before structure changes in price. So the structure in momentum changes way before the price structure changes. And that's something really, really important for us to understand. Now, the levels that I have here are just retracement levels measured from the previous swings that we have right here. So we don't have to pay much attention to them. What I want you to pay attention is this level right here, which is 73.61, which is this low right here. We happen to close above that low, and we're also having a divergence in momentum. So keep that momentum in mind. If we happen to move below this level of 73.61, then we might see another leg lower in the markets. However, if we are able to keep that level, then we're probably going to see some consolidation in the HYG and then a continuation higher in price. And that will mean that we will see a continuation higher in equities. So as always, I always like to give you levels, and the level that I'm going to give you is 73.61. Keep the level in mind for HYG. Now let's move into the indexes, and I'm going to show you, we're going to go through the ICE, we're going to go through the composite, we're also going to go through the SPY, and then I want to go through the IWM. First, let's start here with the Nasdaq composite. And what we can see in the Nasdaq composite, I'm going to be quickly with this one because it's kind of the same analysis that we did in HYG. And we're basically seeing as well, we're seeing price down, but we're seeing momentum in the trend oscillator actually going to the upside, which is a bullish divergence. And we can also see momentum in the squeeze going to the upside. So my expectation is that we're going to see at least a snapback rally, probably into the 618 level right here, which is measured from this swing high to this swing low right here. And then we have to see how this indicator looks when we make that move. And we also want to see what is the interaction between price and the 8th exponential moving average, because if we happen to respect the 8th exponential moving average as we did in the last rally that we have, then we tend to see changes in trend. So keep that EMA in mind, and also keep these levels in mind. The level that I'm going to give you for the Nasdaq composite is going to be this level right here, which is 11,471.50, which is the low from this level. And I want to see that if we are able to reclaim that level, given that we have divergences of momentum, I'm gonna be expecting a retest of this a test of this 0618 retracement that we have on the chart. And then if we move to the SPY, we're gonna see something super similar, which is that we also have a divergence in the SPY, which means that we have continued to make lower lows on price while we're actually making a higher low in momentum, and the same is happening in the squeeze. And the level that I'm going to give you for the SPY, is also this low right here, which is somewhere around, let me see what level that is. That's going to be 388.42. That's the level that I'm going to share with you in the SPY, given the move that we had last week. So basically the analysis is going to be the same. When I'm going to be looking for the SPY is a retest, well, a test of the 0618 level, which is the blue line that we have here, measured from this swing high to this swing low. And it's going to come basically in the break of a structure level, which is this red line right here. So somewhere around 401.54. I'm going to be looking for that bounce next week in the market. And also what is pretty important to understand is that moves to the downside tend to come in 3 waves, right? So we tend to have a move to the downside, then we have a snapback rally, then we have another move to the downside, then we have a snapback rally, and now this is the 3rd wave to the downside. Why do I say that this 3rd wave is complete? I'm saying that this 3rd wave is complete because we already reached the the 1.272 extension measured from this swing low to this swing high right here, and that tends to end the cycle of the move, and then we tend to see snapback rallies in the indexes, and then we have to see how we handle this level right here that we already mentioned, and see if this actually is trying to bottom or we're going to see some continuation to the downside. That's for the SPY, and then I want to show you IWM because I think that IWM actually here is actually leading in the market, right? If you remember the Nasdaq composite that we already take a look at and the SPY, those actually broke below the lows that we had on September 6th, which is this low right here. You can see that we're holding that low in IWM, and we're also seeing some divergence. Why do I say that I'm seeing some divergence? Because we actually pierced below this level, which was somewhere around 177.50, but we have also divergence in the squeeze and the trend oscillator. So what I want to see, what I think we're seeing in the IWM is a market that is trying to bottom at that 0618 level, measured from the low that we had right here all the way to the high that we had right here. And we can see that the IWM is actually trying to form a double bottom. Now, my expectation for the IWM is that we're going to see a rally back all the way to 184.91, which is the 0618 retracement measure from this swing high to this swing low right here. If we happen to cut it to drop below this level, then perhaps we're going to come all the way and fill this gap that we have right here. So make sure to have those levels in your chart. The level that I'm going to give you is 177.50, which is the low that we have right here. And right now, the expectation given to the divergence that we're seeing across the board in the markets, I'm going to be expecting for a retracement back all the way to 184.91 in the IWM. Now let's take a look at some of the other ETFs that I think are important in the market. Let's start with gold. We're going to take a look at gold and silver, and I'm going to tell you why. Now, gold, it looks particularly interesting here. Why? Because gold tends to move inverse to the dollar. Not every time, but it tends to. And in this market that we're seeing right now, it has been correlating pretty well to the dollar. Now, why do I think the dollar is important? I think the dollar is important because the dollar has been moving inversely, at least in this market that we're seeing right now, inversely to the Nasdaq composite on the SPY and the overall market. Why? Because we're seeing some tightening in the economy right now based on the rate hikes that we're seeing for the Fed. Now, I think that gold is trying to bottom here. Now, this is why I think that. You can see that gold has made lower lows in price, but we're actually seeing a lot of divergence in momentum. I'm seeing a lot of divergence in the trend oscillator, which is trying to make higher lows. And we also had another divergence here in this move in particular, in which we make lower lows, but the momentum is trying to make higher lows. I have found that trends tend to end when the momentum oscillator is making a momentum divergence, at least in the short term. So now you can see that we also have extended to some of the Fibonacci extensions that I have right now. This 1272 is measured from this swing low to this swing high here, and the 1618 is measured from this swing low to this swing high right here. Now, for now, gold is holding this level. However, as long as gold continues to trade below 158, then this might be just a stopping point before a continuation to the downside, which will probably trigger another leg higher in the dollar, and then the markets might continue to the downside. So that's going to be like the bearish case. However, if these divergences play out and gold is able to reclaim 158, then I think we're going to see a counter trend rally, and that counter trend rally is actually going to fire a short squeeze in gold, which has been a pretty heavy shorted in this market that we're seeing right now. Now, let me show you SLV, because SLV is a pretty interesting chart here, because SLV is moving way faster than gold. You can see that in SLV, we also have a divergence, which means that price is moving to the downside, but the momentum in the trend oscillator is moving to the upside. And you can see that the momentum in the squeeze is almost above zero right now. I think it's currently above zero. Let me just make a double click here. This is currently above zero. So this is actually pretty constructive. And if silver is moving ahead, then I think that's kind of an indication of what gold might do. As you can see, silver right now is holding above this 17.91, and it held that 8 exponential moving average, which means that we actually have a change in trend, also confirmed by the trend oscillator, which is above the 50 line and is also above that EMA right here. So I think that if silver wants to move higher, then we can assume that gold might also turn at the extensions that I mentioned before. Now let's take a look at the dollar, and then we're going to take a look at bonds, and then we can end this video. Here is UUP, which is the index for the dollar, for the DXY. And what I'm seeing here, very important, is that we actually have a squeeze. This squeeze is pointing to the downside, and we can also see that the momentum oscillator is already below the EMA. Bullish moves tend to happen when the trend oscillator is above that EMA, and now we're below it. And we're also having a lot of divergences. You can see that we made a higher high in price, but the momentum in the trend oscillator is already making a lower high. And the momentum tends to move way faster than price. So if this happens, right, for now, as long as the dollar continues to hold 29.21, then we can assume that the trend in the UUP might continue to the upside. However, the level that I'm going to give you for this chart is going to be 29.21. If we happen to close below that level, that might set the squeeze to the downside and might also set this trend oscillator to break below 50. If that happens, I think we're going to see a very strong rally in metals, which is silver and gold, and also the miners. And we're going to see the dollar moving, accelerating to the downside, and we might see a rally in equities. So keep these charts in mind. And then the last chart that I'm going to show you is the chart of TLT, which moves inversely to the one in TNX. So let's just analyze this one for a second. You can see right now that bonds, we're currently trading below this low right here, which is the low that we actually made in June. We then had a pretty strong move to the upside, and then of course bonds have been moving pretty strongly to the downside, which means that the TNX is trading near the highs as of now. However, I'm starting to see some divergences in the market, in this market in particular, because we make a lower low we make a lower a lower low in price, but we're starting to make a higher high in the indicator. And right now that I take a look at this, we're starting to also see this is somewhere around 36, this is somewhere around 37. We're also starting to see some divergences between price as well in the kind of in the largest scope. You can see that we made actually a lower low here, but we're starting to make higher highs in the momentum in the TLT as well. So the level that I'm going to give you for this one is this low right here, which right now is at 108.12. If we happen to close above 108.12 on a daily closing basis, I think that this could trigger a short squeeze in bonds. And you can see that bonds have been trending below that 8 exponential, which is the orange line here. It has been trending pretty nicely. If we happen to close above that level, or you can also use the 0618, which is measured from this swing high to this swing low here. If we happen to close above that level, which means a close above these levels right here, then I think we can see a pretty strong counter trend rally in bonds that could take us higher, and that will also move the market higher. So keep those charts in mind. I don't think that we have to analyze anything else. I think that these are the most important charts to have an understanding of what the market what the market might do next week. So my summary of the analysis that we just made is that we're seeing a lot of divergences in very important products such as GLD, such as GLD, UUP, and TLT. And those charts, given the macro situations that we're having right now with the economy, I think those are really important charts. And if we happen to see divergences in those charts, and these divergences actually play out, I think that the market might be actually in the bottoming cycle and that we might actually move to the upside, fooling the majority, which thinks that the market is actually going to crash. So keep that in mind, and also keep the chart of the UVXY very closely, because I think that's a really, really important chart. So thank you so much, guys, for watching. Let me see if I have anything else to show you. No, I think that's everything that I want to share in this video. So thank you so much, guys, for watching. I'm sure that this video is going to be helpful because I share a lot of information. based on technical patterns and based on price levels, which at the end are the most important levels that we can watch in the market. So thank you so much, guys, for watching. Remember to like and subscribe, leave a comment, make sure to like it, to like the video. That way we can spread this analysis to more traders out there. And make sure to follow me on my Twitter account, which is at Pancho at Valorizo Capital. And in my Twitter account, I share a lot of information on a daily basis. And that way we can also interact in that social media. So thank you so much, guys, and peace. Bye-bye.